Hello everyone, and welcome to our April version of Strategy in Action. This month I'm excited to talk about one of our important growth initiatives, and that's our corporate banking business, where we're investing in new teams, new businesses, enhancing our product capabilities, and we even have an acquisition strategy to support the growth in our business. I'm joined today by Brian Willman, who leads our commercial banking business, and Joel Stevens, who leads our capital markets teams. Both areas are growing significantly. Brian, when we talk about growth in corporate banking, adding new teams, adding new capabilities and services for customers, what does that look like in the commercial banking part of our business?
Sure. Well, we're fortunate to have a number of new growth initiatives touch the commercial bank this year. For instance, the Commercial Banking Solutions team stood up a dedicated outbound business development group using targeted prospect lists. They're actually making more than 50 outbound calls per day, and what we're hearing from these prospects is they haven't heard from their banker or their bank in over 2 years, either because of the pandemic or because maybe that competitor is going through a merger-related disruption. And so in any event, it provides us an opportunity to show them the region's value proposition, and the early returns are promising. Not only have we won new clients within CBS, but we've provided warm referrals to our local commercial RMs in the fields for those larger opportunities. In addition to that, on the small business product set for lending, we now have the ability to offer Ascentium small dollar equipment financing in all of our branches, coupled with enhancements to our SBA and franchise products, now forms a triple threat to provide a solution to all the unique financing needs of our small business clients in our footprint. And lastly, John, we generate approximately 18% of our revenue as NIR in the commercial bank. That might sound good, but our peers are closer to 30%. And Joel and I talked a few months ago around how do we close that gap. We chose to hire Coulter Warlick to lead a dedicated commercial corporate finance team, and partnering with Joel's capital markets products and expertise to really form a more strategic advisory platform for our core commercial clients. It starts with the needs of the client and understanding what those needs are, whether it's a local RM or if those needs require a product or an industry specialization. We want to give them solutions. They are faced with so many different competing forces and stresses in their lives as business owners. Inflationary pressures, supply chain disruption, trying to fill labor. And so if we can eliminate one of those stressors, providing a solution or a financial product, then I think we've got a client for life. It's an ever-changing product and competitive landscape, so we have to stay ahead of the game. But I do believe we have more products and services at our disposal than we ever have before. And so we believe that local connectivity with that support is a winning recipe.
Yeah, I think local bankers working with product experts can get in front of clients and have good conversations, meaningful conversations with them is a real difference maker. And in fact, we're seeing it in our results. We'll just released earnings and we'll show period end loan growth of about 3.3%, and that's across corporate banking, commercial banking, and real estate banking, all of our businesses. And I do believe that is a reflection that our strategy is working. We just got to keep executing it well. Capital markets has been another source of great growth for us, Joel. Not so much this quarter, but in previous quarters, and a lot of that growth has been the result of an acquisition strategy. We've actually acquired some businesses that have led to expanded capabilities, and as a result we can meet more client needs. Talk a bit about that, if you would, both what we've accomplished and what we hope to continue to build on.
Yeah, happy to, John, and we have added a number of new capabilities to our capital markets products offering over the last year. I'm going to start with the commercial corporate finance group that Brian referenced, Coulter Warlick and his team. Within the first year that Coulter has been in place, and we added some dedicated coverage from a product perspective to our commercial bankers on the syndications side. We increased capital markets revenue from the commercial bank 21% in 2021. We're very excited about that. It speaks to the early success of Coulter and his team, and we're looking forward to building on that as we move forward in 2022. Secondly, I would mention that we were able, after many, many years of work for our real estate banking clients, we're able to pick up a Freddie Mac conventional and affordable housing capability to deliver multifamily capital to our real estate clients in our footprint. We worked on that for many years. We were able to successfully pick that up. And when I say conventional, that means loan amounts larger than $7.5 million. When I say affordable housing, that can mean both large A and small A affordable. A large A affordable housing project is one that's going to have some sort of direct government subsidy, be it in the form of a tax credit or in the form of a government contract. A small A is going to be a property that's targeted at a particular, think of it more as a middle and lower middle income property, but not government supported. Through those efforts, we were able to pick up that capability and fill that product gap for us in our real estate banking product offering. In addition to that, we were able to acquire Sabal Capital Partners, which we're very excited about. Early success there. We closed 84 loans for $284 million in volume in Sabal Capital Partners in the first quarter. We acquired Clearsight, a mergers and acquisitions advisory firm focused on companies that are selling rather than companies that are acquiring businesses. That filled a product gap for us in our advisory product offering from the perspective that they are very sector specific and focused. Think technology, so it could be tech-enabled business services, it could be software, it could be data and analytics, but those sectors complement the advisory businesses that we had in place already. All of those acquisitions that we've made over the course of, call it the last year, represent an opportunity for us to broaden our product offerings to meet client needs for our corporate and commercial clients, as well as those in real estate banking, to create that shared value. So we're meeting client needs, we're generating additional fee income for the company, and in many of these product offerings, we're helping the community as well.
Our bankers in both your segments make a real difference, and I'm proud of the fact that we continue to improve the quality of our teams. We continue to recruit the quality bankers to our platform. Maybe Joe, you first, talk about your recruiting efforts, why people want to come work at Regions, what's your vision for continuing to build out the business?
Regions, our culture, John, is the number one reason why folks, we're more typically in the capital markets area, specifically a pretty typical recruiting routine. There's some acquisitions that have disrupted the banking industry. There are opportunities there. A more typical opportunity for us is going to be an associate that's at a larger firm where they're just not comfortable with the culture. Our culture here is very unique. We believe in work-life balance. We believe in working hard. We believe in financial results. We believe in doing the right thing, and we believe in having fun while we do all of those things. And so it's our culture where we are most able to have success, and we are, as we are adding these new products and capabilities, we're typically going to firms larger than us that have a deeper bench, and we're getting someone senior to help us learn how to properly execute on some of these new products and capabilities.
Mm-hmm. Brian?
Yeah, I couldn't agree more. I mean, our culture is our value proposition to potential candidates to join Regions. What I also hear from bankers that I talk to in the recruiting process is they want to feel confident that they can take care of their clients. And I think some of the merger-related activity externally has benefited us to be able to have some certainty around that. In addition, they want to see a pathway potentially for growth, which I think in our franchise provides that, and also being part of something greater than themselves. And I think we really lived that around our shared value model. We've had a lot of success in not only our growth markets and attracting new bankers, but some of our core markets that have known Regions as we're kind of the number one dominant market share. And they say, hey, that's a winning team. I want to be a part of that versus competing against us. So we hope it continues, and we're going to take advantage of it.
Well, we're counting on it continuing for sure. thank you both for joining me today, and thanks most importantly for the great work that you and your teams are doing. Thanks for your leadership. I think the story that we tell about the corporate bank and the growth that we've been able to generate, the good work we're doing for our customers, for our communities, and as a result for our associates and shareholders is something to be really proud of. And we're counting on you continuing to carry the momentum through 2022 and into 2023. So again, thank you very much. And thanks all of you for all you do for our customers. Thanks for tuning in. We'll see you next month with our May version of Strategy in Action.